anyone can find themselves in a winning trade. So guys, what they don't tell you about day trading is making profit on a winning trade is only one part of being profitable. You need to make money long term to be a trader, to make profit long term, and making money today does not guarantee making money tomorrow. Trading is nothing like a 9 to 5. It is a business. It needs to be treated exactly like a business. Every single dollar in trading is not guaranteed. You need money to make money. You're going to have to risk the money that you've made in order to make more money the next day. So to play the game, you need to risk. Making money today does not guarantee making money tomorrow, because you can easily lose that money just as fast as you made it. This is exactly why professional traders look at trading results on a long-term basis, because this is what generally matters. They understand that making money in a day means virtually nothing. You can easily just lose that money within the same day or the next day. It is not difficult at all, and you're going to be susceptible to do that for as long as you're trading in Korea. As long as you're going to play the game, you're going to have to endure a risk. So you're just going to have to get used to that and look at it and looking at money in a different way. You will find that even when you are consistent, that you will still be giving profits back to the markets, because this is just part of the game. You're going to take losses. You're not going to bank every single dollar that you make on winning trades. Some of that is going to have to compensate losses, stuff like that. So it's just part of the game. You're going to have to deal with taking losses and lose professionally. The way I look at it, and what it truly shown me, is that only the money in your bank account is guaranteed. And we can even, well, you could even argue that isn't even guaranteed. But when it comes to trading accounts and equity and all that stuff, none of that's really guaranteed. It's all money that you will use at risk at some point. You don't need to be harsh on yourself about taking losses. It's normal. You will take losses. Even the best traders in the world take losses. It does not mean you can't make money long term, but you need to deal with them professionally. And also it means don't celebrate the wins too much. I will now give you some tips on how you can increase the profits that you take out of the markets. One of the tips that will help you secure more profits is just simply taking less trades. Now, this will inevitably force you to focus on taking higher quality setups, because you will understand subconsciously that you can only take a certain amount of trades, or you have a limit to take a certain amount of trades in a week or whatever, or even in a month. So you're going to focus on taking the best trades in that time period, because you don't want to waste one of those trades on a trade that wasn't really worth it, you know. So this is inherently and it's obviously going to leave you with less exposure, because you're going to be in the market far less. Another tip is take breaks after losses. Basically, it'll prevent you from making any mistakes. And when you're not in the right state of mind, when you've taken a loss, you're emotional. It hurts. It's painful to lose money. So it's very, very important for you to take a step away from the charts. Go and do something normal. Go to the store, go outside for a walk, go to the gym, go and do something that is normal and that isn't sat in front of a computer screen looking at digits going up and down, because it can destroy your mind, trust me. But like I said, this will just help you clear your mind much more, and you'll be able to make clearer decisions later, and you won't use the trauma from the last loss and carry it on to the next trade and have it affect that brand new setup. And one more tip is stick to static risk, a static risk amount, a static percentage amount per trade. This is obviously going to help you keep those losses small and at the right amount of percentage or whatever, and you won't be taking too big of a loss, like you over, because if you start to only increase risk when your account is growing and keep that risk still at the same percentage, so it isn't interfering with your risk to reward and it isn't eating into your profits, because it can very easily get carried away once you get into profits to start upping your risk and getting greedy, stuff like that. So you don't want to do that, because that's just going to eat into your profits long term, because you would inevitably end up taking more losses, and they're going to hurt when you take a loss. Because even if you go on a 5-win streak and yeah, it's great, you're upping your risk and you're making all this extra money, when you up your risk and your risk is so high now, you're eventually going to take a loss, and that thing, trust me, it's going to sting. You're going to be in an emotional state where you're more than likely going to make a bad decision, like jumping in another trade to compensate for the extra loss that you took, because now you're in deeper drawdown than you should have been from one loss. Now you might have took like 3 losses in a row on one trade, basically, based on your risk. So you don't want to be doing that. Stick to static risk. You will avoid eating into your profits unnecessarily. We all already know why risk management is so important. It gives us the ability to stay in the game and protect our capital, so we can actually have the opportunity to grow our capital in the first place. The issue with most beginners is they already wash themselves out of the game by over risking and putting themselves in a position where they can make very minimal mistakes. So when they inevitably make mistakes, because they're a beginner, of course they're going to make mistakes, it's how they're going to learn, it burns them badly to the point where they're completely out of the game and they can't even participate anymore, because they simply don't have the capital to do so.